Hey, Chad Chernicoff here, Total Atlanta Realty. Today we're starting with a new series on mortgages. And the first one we're going to talk about is an FHA loan. But before we start, I kind of want to talk with you about what a mortgage lender is going to look for when qualifying you for certain loan programs. So when you see a mortgage lender, what they're going to do is they're going to ask for your assets, your income, how much you have for a down payment, look at your debts, look at your credit score, look at your credit overall, and a few other items. And they're going to take and put this into a formula, and they're going to figure out what loan programs you qualify for. And most people qualify for an FHA, and an FHA is basically a government-backed loan program that comes with certain guidelines that be followed and generally take a little bit longer to close than your typical 5 or 10% down conventional. So what are some of those guidelines? Well, you have to have at least a 620 credit score. There are some loan programs with FHA that go down to 600 and 580, but they're very, very restrictive, and it doesn't black people don't get qualified for. So 620 is kind of that magic number. The second thing is it has one of the lowest down payments of all of them at 3.5%. But with the low down payment and the government backing the loan, it does come with a cost. And there is a 1.75% funding fee. So for every $100,000, $1,750 are going to be rolled into the loan. So that's something to think about. And also, you're talking about mortgage insurance. Well, mortgage insurance is basically insurance for the lender. So if the borrower defaults or does not pay on their loan, that they're covered. And with a FHA loan, the mortgage insurance is going to be a little higher than some of the other loans. Basically how it works is the more money you put down as a down payment, the lower your PMI or your mortgage insurance will be. We have to talk about appraisers as well. With an appraiser and FHA loan, it's a little bit different. Typically, if you have an appraiser go out to the house, they appraise the house. But for an FHA loan, they have to be a FHA certified appraiser. What that means is they're doing two things. One is they are appraising the value of the house, and two is they're also looking at the house itself and making sure it meets the FHA guidelines. FHA says it has to be a livable house, so there are certain guidelines it has to meet. So if there are holes in the wall or there's missing flooring in the bathroom or bedroom, those items will come up as repairs on the appraisal report. If there's any repairs on the appraisal report, then basically the loan cannot move forward till they are complete. Once they're completed, the appraiser goes back out, he checks off to make sure they're done, and then the loan can move forward. But that comes at a cost. The buyer has to pay an additional $125 for the FHA appraiser to go out there the second time to check off on the repairs. And the last thing I kind of want to talk to you about is when you're selecting a house. 3, 4, 5 years ago, when the market was down and values were down, there's a lot more inventory, you had a better selection of homes in lower price points. Well now, especially in lower price points, you're getting back to that true starter home type house where you're going to have some updating and some minor repairs. You just want to make sure their minor repairs are not they're not going to affect the appraisal. So if you're having repairs that are, rotten wood, holes, things like that, that's going to come back to as repairs need to be completed. So you want to make sure a lot of these are basically minor repairs or upgrades to a house. So for more information about FHA loans, go to my website at totalatlantarealty.com. and go to my blog and look under the mortgage and finance section. A lot of great information. The next piece in this series is going to be on the 5% conventional loan. Thanks for watching.